Hello everyone, thanks for joining us today and welcome to the Specialist Trading educational presentation. Now today I'd like to talk to you about how to identify bracket trades before they take off. And this is in either direction, either straight up or straight down. This is a brand new feature we have at Specialist Trading on our PTS Primo Charting Platform, and it takes all the hard work out of it for you for identifying these bracket trades. For example, let's take a look here at this chart. This is a current chart of the QQQs. That's the ETF that represents the NASDAQ index. And this was taken just the last week prior to May, so just a couple of weeks ago. As we can see, we're kind of going sideways here. But the new feature I'm going to talk to you about today actually identified a bracket trade setup right here. And on the very next bar, it generated a sell signal. This was on the first day, trading day of May. And we all know what's happened currently in the markets. As you can see, we've gone straight down. This was a current chart taken up until just a few hours ago. And this was an actual bracket trade setup that I'm going to be sharing with you and show you exactly how you could have taken advantage of this. The good news, once again, is that this is automatically done for you on our platform, the PTS Primo Charting Platform. This is the educational platform that actually teaches you how to trade bracket trades. So welcome once again. This promises to be a great educational presentation. I'm really excited about this because I'm going to be talking about a new feature we have that I'm going to be actually sharing with you in a class structured for this weekend. So you'll be able to take this class if you decide to come on board. And I really think it'll be worth your while because we're going to teach you several ways in which to trade with this new tool. And one of them is just with the bracket trades. So welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. I teamed up with Pro Trader Strategies 13 years ago with one goal in mind, and that was simply to educate traders. And you'll see that in today's presentation that we really want to educate you. I've been trading for 44 years. So in my 44 years of trading, which I started on the floor of the Pacific Stock Exchange, I've accumulated a lot of different strategies, a lot of different techniques, a lot of different methods. I've also traded through crashes before, two crashes before, and bull markets that have followed after the crashes. So I know what works in terms of consistency, and I know what doesn't. So that's why we formulated Specialist Trading to teach all of our students around the world the things that I've accumulated that actually work, that have stood the test of time. And you'll be surprised how many things that we've been taught that are supposed to work really have no sense of consistency at all. So this is what we do. We are an educational company first and foremost with one goal, teaching you how to trade so that you can ultimately be in charge of your own trading destiny. And you'll see that in the attention to detail we give in trying to teach you in today's educational webinar. Now, before we begin, as always, we are required first to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this new feature, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, since we are an educational company, please remember that all examples are strictly for educational purposes only. Now, another way to get free education on a daily basis, so you don't have to wait for once a week to get this, or for our free webinars, is that you can follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. I would highly recommend copying that down so you can join us on Twitter, because every day I post anywhere from 5 or 6 postings from little bits of financial wisdom to signals that our strategies have generated, and a little brief description on why the signal was generated in the first place. So lots of great free information. Please feel free to follow us on Twitter. Now remember, we are not like other webinars you may have attended in the past. If you've come here today thinking I'm going to tell you what I think the market's going to do, is it going to keep going down, or is it bottoming out, or what the best time frame to trade is, or what the best stock is to buy or sell, you've really come to the wrong place. That goes entirely, and let me repeat that again, entirely against our philosophy of education. You see, as an educator, we want to share with you all the things that have stood the test of time so that ultimately you can make your own trading decisions. The entire industry is based on you going to a chat room or a trading room or watching someone on TV or waiting with bated breath for the earnings or the jobless claims to come out so that you can make a decision. But you see, all the decisions are based off of someone or something else, what they're telling you what to do. In my opinion, after trading for 44 years, that's why most traders fail, because you're not making your decisions off of the source, and that's off the chart in front of you. And the reason why most traders don't do that is they feel the number one excuse I've been told is, well, Steve, I haven't been trading as long as you, or I don't have enough education the way you did, or I don't have enough experience. When you say those things, you're basically telling the markets, I don't know what to do, so I'll let somebody else decide for me. Think of it. How do you make your own trading decisions? Do you go to a chat room? Did you buy a $10,000 system that automatically spits out all of the buy and sell signals for you? You see, when you do that, you take yourself out of the game. But when you put yourself in the game with things that have shown the test of time that have worked, that's when you become a consistent trader. So as an educator, my goal is not to force feed you signals. It's not to tell you what the best market is or what I think the market's going to do. My goal is to teach you how to trade so that you can make those decisions yourself. Why? Because that's the only way I have seen in 44 years of trading that one becomes a consistent trader. This was the same way I was taught some 4 decades ago, and this is the same specialist edge I teach to all of my students around the world. So hopefully you'll be able to become a student of mine and not just have a couple of good months or maybe a couple of good years even. I want you to have a couple of good decades so you can be trading the rest of your life, okay? Now, this is an educational class today, so ask me as many questions as possible, but please, I like to wait till the end of class to ask questions. Oftentimes, your question will be answered on the very next slide. So if you do have one, please wait till the end or write it down, try to remember it. I promise I'll get to them. The only question I will answer is this, and that is this being recorded? Yes, it is. All of our webinars are recorded, so you will get a link to this recording as soon as we complete today's presentation. So if you have any questions, please remember we have a good group here today. Wait till the end of class to ask them. All right, with that stated, let's begin today's educational presentation. First of all, let us define what bracket trade setups actually are, because I know a lot of students trade bracket trades. They've purchased some $5,000, $10,000 system that automatically spits them out for you. And a lot of other students still have never heard of bracket trades. So roughly defined, bracket trade setups are basically breakout signals, okay? They're not a pullback signal. They're not a continuation signal, but they're a breakout type of trade. But with two opposite side buy and sell entry orders. Now, here's the way it's done. In other words, if the initial entry is on the buy side, so if the initial order that is executed is a buy entry, well, then the other signal, which is a sell entry, will apply as your protective sell stop. Now, conversely, if the initial entry is on the sell side, if the first bar to be executed is a sell order and you go short, well, then the other signal will apply as your protective buy stop, okay? So this is the common way to trade bracket trade setups. Now, bracket trades can be consisting of a bracket anywhere from 10, 20 bars to even a couple of bars, okay? And that setup I shared with you in the beginning of the presentation had roughly about 6 bars. But let's break it down really simply just to show you this generic chart with two generic bars here. Let's say this is your bracket, all right? You believe in support and resistance, and you think that these two bars here completely define what the support and resistance is. This is your bracket right here. So the resistance is at the top, so if you break out of that, you want to buy. And the support is at the bottom, so if you break down from that, you want to sell, right? So this is your bracket based on this, once again, this theoretical 2-bar setup here. So what you would do is, in a bracket trade, is the first area that's violated or touched, that will become your order, and then the opposite will be your protective side, all right? So in other words, if we bought here initially, this is now used as our protective sell area. We place an order to protect ourselves. But if initially we sold, well, then here would be our protective buy stop so that we would exit the trade with a loss. So you know right off the bat clearly what your risk is. And this is an advantage to trading with the bracket trade setups. You know exactly how much you're going to risk. And if it's too much because you know the size of the bracket, well, then you can decide, well, I don't want to take the trade, or you can decide to take the trade. So it really helps a lot knowing this in advance. So let's look at this example right here in BB1. Let's say our system, which we bought from some other so-called educator, said that this is a bracket right here, okay? All right, so once again, we wait for the first threshold to be violated, and that will be where we enter. So we wait, and as we can see in the very next bar, we would have entered here, and we have a nice trade, okay? So that worked out very well, okay? But they don't always work out as nicely as that. For example, let's say that same system you purchased generated a bracket right here using these 5 or 6 bars. So you say to yourself, okay, I'm going to wait and see which side is violated first. And right off the bat, it goes up. And so you become a buyer. And let's say you place your sell stop right here, and look what happened. Now, let's say you weren't that disciplined to place that sell stop. Well, look what happened. You have a tremendous loss on your hands. So this leads us to ask the question, is there a simple and easy way to properly identify consistent bracket trades? Because really, that's what it's all about. I'm not going to sit here and tell you that our new feature never loses, that every one is a winner. In fact, I'm going to show you examples of where you did have losses today, just to be, forthright with you and share with you in transparency that not every trade is always a winner. But consistency means an awareness of losses, but a tool or a setup or a strategy that's able to recoup those losses. So that's what we're looking for. We're looking for consistency. You don't want to look for home runs. You want to search for a method that is very consistent, because that's what will keep you in the game a long time. That's what will give you longevity. That's what will sustain you, okay? And the good news is there is. Now, this is the feature we're talking about, the new PTS Dynamic Stop. In fact, I'm going to be giving a course this weekend on it, and this is just one of the many features that is available through using our new dynamic stops. So if you're not familiar with what they are, the PTS Dynamic Stop is a proprietary stop placement formula that moves with the ebb and flow of price and is specifically designed to track the behavior of the market you are currently trading. You see, so many students use stop levels and stop orders based on a dollar amount, or even based randomly, based on, well, I think it should stop here, or, I'll kind of decide that as the trade unfolds. But this is a proprietary formula that's actually based on the source of what you're trading. It's based on the behavior of the market you're trading, whatever time frame, whatever direction. For example, let's say you had a buy signal here last month in DORM, D-O-R-M, dormant products. And initially, the PTS Dynamic Stop would have generated a stop right below there. That's one of the stops you could have taken. And you have a very nice trade. Now, here's the problem with most stop loss. People don't know how to track the trade or how to place your stop after that. Well, the Dynamic Stop automatically on our platform, if you click on Sell Stop, would start to automatically generate these along the way as the trade unfolded. And you see, it's not predicated on price level. It's not predicated on a pattern. None of that. It's based on a proprietary formula that follows the behavior of the market you're tracking. Okay. Now, the beauty of this is it's also designed to keep you in a winning trade as long as possible. As we keep our stop right there at that level, you see how it protected our profits before the market fell out of bed. And so where most traders have difficulty is they don't know exactly where to place their stop, and what was originally a really nice winning trade turned into a loss. So this is how the dynamic stop can actually help you in its most basic form. But we're going to be talking about something entirely different today. We're going to be talking about a technique with bracket trading, because one of the great advantages and features of the dynamic stop feature is that it actually can generate signals through a technique. All right. So one of these techniques, which I'm going to be teaching in the course, I'll share with you today. This is what we call Technique C, and it's specifically for bracket trading. All right. So I want to explain the process to you today and show you how simple it is to apply this process. Remember, everything you're going to be seeing today is generated and displayed coming entirely from the PTS Primo Charting Platform. You won't find this new feature anywhere else except on the PTS Primo Charting Platform, and it's one click away. All right, so let's look at this example in NOC. All right, someone looking at this will say, well, Steve, there's really nothing happening here. I mean, there's no way I can really tell. It's kind of like drifting lower, but there's no news coming out. That guy I watch after the close on TV, he really doesn't like the stock. And then I brought it up in the chat room I like to go to, and no one was really interested in it. So I think I'm going to just kind of stay away from it. All right. Does that sound familiar, the way most traders make their decisions? We're not making the decision based off the market we're looking at. What is the market behavior telling us? Well, here's how to use this feature with Technique C. On our platform, you would simply go up to PTS Dynamic Stop right here, click that on, and in the drop-down menu, you're going to see this right here. Okay. Now, what you want to do is normally, if you were long a trade already, well, you would click on Sell Stop. That's a protective sell stop. So if you had to sell to get out of the trade, or if you were short, you would click on Buy Stop to get out of the trade, to get you to buy to cover your short position. But with this technique, technique number C, we want to click on both the buy stop and the sell stop categories. Because what they're going to do is what we're going to search for is this bracket right here. And the unique thing about Technique C is that it creates the brackets based off one bar. So we don't need 5 or 6 bars. We don't need a full week's worth. All we need is one bar. So all you have to do is click that on and keep it on, and it will automatically generate and show you when you have these brackets. So the way this works is, once again, if we violate this upper line right here and we give you the actual price level, well, you'll know that's where you'll buy, and this will be your protective stop, and then vice versa. So we know we're going to be risking roughly about 4 or 5 points right here. Let's say 5 points, okay? That's our risk. And if that's fine with you, then go ahead and take this bracket trade. So let's take it on a step-by-step basis and see how this trade would have unfolded. Remember, this was just a couple of weeks ago. So the first bar after that, nothing happened. It hadn't traded up at the top bracket or the lower bracket. But then look what happened here. On the 29th of April, it gapped up, so you would have been purchasing roughly right here. Now remember, you risked roughly 5 points. You've already made double that, because if you would have bought roughly, let's say at 342, the stock had already gone up to 352, 353. So you could have made twice what you risked. And that's a nice little trade, a nice little one-day trade, okay? The good risk-reward ratio. But if you decided to stay in the trade longer, well, you could have made a lot more than that, as you can see, okay? You see, the beauty of a bracket trade is what it's telling you is that the market you're looking at, regardless of time frame or direction, is set to coil. It's set to bust out or break out in a certain direction. The only problem is we don't know which direction that is. It's kind of, getting really tight, and it's just getting ready to explode in one way or the other. So the way you trade a bracket trade is you have order entries on each side. And then once one is initialized, you use the opposite side as your stop placement. All right, here's an example in QS. Once again, this was last month, at the beginning of the month. Really doesn't look like much is happening here. Someone could say, well, this is a flag pattern, Steve. We're just kind of consolidating, high-level consolidation before we bust out to the upside. I like this industry group. I like this stock. I'm just looking to buy it once it fills this gap, okay? Because that's what the guy said in the trading room. What is the stock you're looking at telling you? Remember, this is how most traders make their decisions. And this is why 80 to 85% of most traders fail. You're giving your power away to someone or something else that really has no level of consistency. Let's click on PTS Dynamic Stop. In the drop-down menu, let's click on both of them to look for this specific technique. And as we can see right here in this very last bar where you were thinking about getting long, well, you may go long, but you don't want to buy until you get up to here. Or if we break down, you actually want to short this. So once again, you're risking about only 4 points. So if that fits into your risk parameters, it's okay to take this trade. Let's see how it unfolded. Well, the next day, nothing happened. So we could decide to still stay in the trade or not. It's up to us. But look what happened. A day later, you would have gone short, roughly around 47. Remember, you're risking 4 points, and you could have covered all the way down to 30. That's 17 points. So you could have risked 4 points to make 17 points in about a week, okay? This is all from trading this simple tool that is marketing and is following the behavior of the markets. That's all it's doing. But the beauty is we don't know which way it's going to go, so we're just kind of bracketing, and that's what the dynamic stop does. Here's an example in Yelp. Here's how you can change direction, okay? Click on dynamic stop, click on both buy and sell. Here's our upper threshold, our lower threshold. The very next day, you would have been buying roughly about 38, and you have a nice little profit. Remember, a technique does not generate and tell you where to get out or where to, how much shares or contracts to buy. It simply is pinpointing and shining a spotlight on a high probability point of entry. How you decide to exit or money management is entirely up to you. So you could have gotten out of this trade right here. But let's say you're still in the trade and you have a nice profit, and look what happens. This will happen every once in a while. You'll see another bracket Technique C trade being formed. So you can make the decision, well, if we trade here, I'll just exit my long. Or if we trade up above, maybe I'll buy some more shares because this is really strong. Okay, so let's see what happened. Well, nothing happened on the next bar, but then coming a couple more days, look what happened. You would have gotten short. So now you could have gotten short or sold what you were long right here at roughly 38, gotten out at roughly 41, and if you were more aggressive, gone short and taken advantage of the downside. Let's look at Tesla. This was last month. A bracket trade setup was formulated on the very 1st of April. This wasn't an April Fool's joke. You would have gone long roughly at 692, roughly, okay? And your stop is down here at 659. So, you're basically risking about 35 points. You could have purchased actually the calls if you wanted to. But then look what happened here. In about a week's time, the stock went from 692. You roughly made about 75 points. So you would have made roughly about twice what your risk was in about a week. That would have been a nice place to exit because we all know what's happened in the market lately. Here's an example in Etsy, okay? A bracket was right here. You had to wait a day, but ultimately you would have gotten short. And did you notice here that you would have gotten short once it traded at 216.19, but it didn't close there. That's okay. You're still short. Here's where your stop is. So you're roughly risking about 10 or 11 points. Well, look what happened. Coming into this first week of May, stock went from roughly 217 all the way down to 155. Okay, so we're talking about 60, 70 points there. And remember, you are only risking about 11 points. Here's an example of what we mean by consistency. Remember, we said that not every setup is going to work out fine. The beauty of a consistent method is one that's able to recoup its losses as often or as quickly as possible. Here was a sell setup in BLK, BlackRock. It would have gone long, I should say short right here at roughly 800, and it went down, okay? And you feel pretty good. Maybe you bought the puts, but you're roughly risking about 12 or 13 points. And then look what happens. The next day you would have gotten stopped out. Now you have a choice. You can tell yourself, well, I just got stopped out. It fit my, risk parameters. I lost 13 points. I didn't have a ton of shares, but that's okay. I'm fine. I'll look on for the next one. But remember, we still had a bracket right here. A lot of times the initial entry is wrong, and perhaps this one was. All right, so perhaps it was right to go long. So you can always be, if you want to be aggressive, use that in order to cover your loss, but also to go long as well. So you could have gone long roughly about 812, 813, and look what happened. Went up to 876. All right, you could have made about 60 points roughly and covered your 13-point loss and made an extra 55 points. Now, a lot of students always say, well, Steve, yeah, this all works great until the news comes out, and the news always seems to get in the way of everything and it ruins everything. Well, sometimes it does, but it's been my experience that when the market gives you a signal based on market behavior, what usually happens is the signal is in advance of the news and on the right side. Not guaranteed, but oftentimes it is. For example, we see here that Yahoo Finance reported on May 5th, just last week, Peloton and the Feds agreed to a treadmill recall. The exercise giant Peloton, PTON, has agreed to recall its popular and pricey treadmill after at least one child was killed after becoming caught underneath the machine's belt. Peloton has also agreed to recall its limited edition tread after 18 reports of touchscreen loosening and 6 reports of the screen detaching and falling off. No injuries, though, have been reported for the tread. So basically, there was bad news on this. Actually, one killing. That's not very good news at all. So as we look at the chart on the 5th, when the news came out, that was very bad for the company, and look what happened. The stock fell from roughly 99 all the way down to 80 roughly, okay, or the low 80s. So not good news at all. But had you been using the PTS Dynamic Stop bracket trade setup, all you would have to have done was click this on, click on both, and it will automatically track for you. Whenever there is a setup, you will see it appear. So a full week before, look at the bracket that we had in Peloton. Now, why would you, wait for news? Remember, this is the way most traders trade. They wait for news to tell them if something is good or bad. Why would you wait for news when the stock, through the bracket feature here, was telling you that most likely it's getting ready to coil, it's getting ready to burst out in one direction? So all you had to do was monitor this, and at roughly at par at 100, you could have sold here and covered 20 points lower. You're only risking roughly 4 points to possibly make 20 points. So remember, you can follow news if you want. We're not going to tell you that you shouldn't look at news, but in my 44 years, I have seen no consistency at all with following the news. In fact, I stopped looking at news 4 decades ago. And if I'm still here, I'm living proof that you really don't need news. It's not required. Fundamental information is not required to be a consistent trader. What really is required is an ability and knowledge to listen to what the market wants to do and then just to follow it. That's what the core of our education is about. Learning to listen to the market. All of our techniques and methods are based off market behavior, and then just jumping on board in whatever direction the market decides to go. All right, here's an example in gold. It's the ETF that represents gold. Now, as we can see here, we gave a buy signal this last week actually, in gold by breaking out of that bracket. It's still roughly around this area, but this is a nice trade that you just saw that could have happened last week. Let's look at Twitter, all right? Twitter fell out of bed this past month. Someone was saying, wow, there was some bad news that came out. Look what happened here. We were fine, kind of stabilizing here, and then look what happened. Well, it's funny how we had a bracket trade a full 2 weeks in advance that could have gotten you in right here, roughly at 69, and you could have held it all the way down to 53, okay? And you were only basically risking about 3 to 4 points on this trade. All right, let's look at Costco. This was going back to the end of April, and this is another example of consistency, being able to recoup a loss. We had a bracket trade right here at the end of April. Nothing happened the following day, but this day we went short on the 26th of April, okay? So this is now going to be our stop at 375. We're roughly risking 5 points. And then look what happened. Well, we went down, so we're going in our favor, but we created another bracket. So now you would move this stop at 375.44 down to 370.96. So basically you're risking 1 point now. You've got short here, here's where you'd cover it. And if you wanted to sell short more, you could wait for it to break this. But look what happened. 2 days later, it broke that stop area, that buy stop. So now you have a choice. You can either say, okay, I lost a point, not a big loss at all, or decide to go long. Had you decided to go long, look what happened. You could have purchased at 371 roughly, and the stock went up to 386, roughly about 15 points, and all you did was lose 1 point. So you would have made roughly about 14 points if you held on that long. This is what we mean by consistency. I'm not going to sit here and tell you that every trade is going to be a winner and you're going to make 20, 30 points. But a consistent method is one that's able to recoup those losses that will occur. All right, let's look at that original chart I shared with you, the QQQs, okay? The ETF that represents the NASDAQ. Now, we all know what's been happening with the market lately, okay? But look what happened using this feature just a couple of weeks ago. The QQQs were basically going sideways. There was no clue, no hint of any really strong downward market. There was no news that came out about news or about interest rates or about what's going on in the Middle East. Nothing had happened yet. The only thing we were aware of was that the market still was heading slowly higher. But that's when you look at outside sources to help you make your decisions. What happens when you listen to the market? Well, all you have to do is click on the Dynamic Stop feature and click on the brackets, and you would have seen that on the 29th of April, it created a bracket. Now, we didn't know which direction this was going to break out of. It could have been to the upside or downside. Had you taken this trade, though, as we wait and hold on, we see that 2 days after the bracket, on the 3rd of May, you could have gone short the QQQs, which represents the market, the NASDAQ market. Remember, there was no news of any of the stuff that a lot of people are justifying why the market has fallen out of the bed. But this feature generated a sell signal well in advance, and we all know what has happened. Now, the markets, if you relate that to the Dow has fallen close to 1,000 points in the last couple of days. But look how the NASDAQ telegraphed this. Did we rely on any news or any features about that, what's going on in the worldly or economics? No. Did some guy in a chat room say that, well, I've been following this, I just don't like the market? No. The market told us it wanted to go lower. Remember, the market tells you just about 99% of the time what it wants to do in advance. The only trouble is we don't know how to listen to the market. We always listen to some guy in a chat room. We listen to some guy on TV, or we listen to some economic report, but we don't listen to the market. This is what our goal is at Specialist Trading, to teach you how to listen to the market. Now, lastly here, remember AMC at the beginning of the year? Here's kind of an older chart going back to January. But AMC took off. Remember that? And a lot of people were just stunned how this inexpensive $3 stock just took off in a matter of days. How could anyone have known that or seen that coming? Well, if you had used the PTS Dynamic Stop bracket feature, you would have seen that, well, it was kind of telling you it wants to break out, but we didn't know which direction. Obviously, if it broke out to the downside, it wouldn't have that far to go down. So the play was most likely it was going to break out to the upside. Now this was on the 20th of January. Coming into February, we see here for one day, nothing happened. And then a day later, that could have been your buy signal, roughly about 3.5, okay? Now you don't have a lot to risk here because the stop was at 275, so you're risking 75 cents. And then we all know what happened in the next week. From 3.5 up to 20.5, roughly 3 or 4 days, okay? So you're risking 75 cents and you potentially could have made, 17, 18 points. So this just shows you the power of this new feature. We're really excited about this. And like I said, the beauty of this is that it's only one of the different techniques. I'm going to be actually teaching a total of 3 different techniques, ways in which to trade it. Now, just to let you know that we're not going to be focusing only on stocks, there are other markets and other time frames you can apply the dynamic stop and all of its different techniques to. For example, here's a 30-minute chart of the E-mini futures on the 7th of May. Okay, this was just last week. We have a bracket set up right here on a 30-minute chart. So we wait for either side to be violated first, and as we can see, we had a buy signal right here, and the E-mini took off roughly from 4,200 all the way to 4,232, roughly about 30 points in one day. That's about $1,500 per contract if you held on that whole time. Here's an example in the Canadian dollar. If you're a currency pair trader, you know the currency has been falling out of bed, the Canadian dollar. Looking at this 4-hour chart on the 4th of May, we see here that we had a bracket. Perhaps we were going to break out to the upside and stop going down, but perhaps we were going to go lower. Well, we broke down here, and this was on the 4th of May, and then look what happened. Went down even lower. So we're talking roughly about 150 pips, which is once again roughly about $1,500 per unit. And then lastly, anybody trade Bitcoin, okay? Let's look at Dogecoin or Dogecoin, or however you pronounce it. Here's a weekly chart going all the way back to the middle of February, okay? Now, this is before anyone was really even noticing this thing because it was trading roughly about 5 or 6 cents. But as you can see here, we had a bracket. Now, if you were looking for a cryptocurrency to get in, an inexpensive one, you would have had to wait. And this is how we can apply this to any time frame, any market. You would have had to wait 1, 2, 3, 4, 5, 6 weeks. But at the 1st of April, okay, it violated the upper area of this bracket. So you could have purchased this at 7 cents, right? Not a bad little trade. And we all know what has happened. This was coming into last week. So this is the beauty of this new feature. You can apply it to any market, any time frame, any direction. So let's review this really quickly. Bracket trade setups are basically breakout signals, but with 2 opposite side buy and sell entry orders. If the initial entry is on the buy side, then you use the other signal as a protective sell stop. Conversely, if the initial entry is on the sell side, well, then the other signal will apply as your protective buy stop. There are bracket trade, courses, bracket trade systems all over the place, but they're not very consistent. Why? Because most of the time they're based off support and resistance, Fibonacci levels, or even just earnings. There's no consistency in any of those things because I've traded with all those for the last 4 decades, and I've seen that they don't really have any high level. I've tried to see and find if they did work, and I found no consistency in anything. Working with the institutions, working with the banks for their bracket setups, working with support and resistance, Fibonacci, there really isn't. They're too subjective. You want something cut and dry, and that's the beauty of the new PTS Dynamic Stop bracket setups. Now ask yourself, we're already in the 2nd quarter of 2021, towards the middle or end of this quarter actually. Do you think bracket trades can help your trading for the remainder of the year? Well, here's the good news. We have a great attendee offer for you today because remember, this is a part of a course. This is just not a single setup feature. This is actually a course that I'm going to be teaching this weekend that includes 3 different ways to trade. I just shared with you a very simplified way of trading the bracket trades, but this is just one of the ways we're going to be teaching you in our Dynamic Stop 2-part course. This is going to be a full day live class, okay? It's going to be broken up into 2 parts. The first part, we're going to cover just the basic overview and the application of our dynamic stops. Remember, it's basically a stop course where we're teaching you how to use this, but the second part is where we're really going to take it up to the next level, because that's where we talk about ways to trade with it. I'm going to go over 3 different highly specialized techniques. One you just saw right now. You just saw the basics of trading with the bracket feature. And I'm going to share with you exactly how to do that and show you a lot of charts so you can start using these techniques right away. Remember, the dynamic stop protects profits and it limits losses as well. Now, remember, everything you saw today was generated using the PTS Primo Charting Platform, because you won't find this anywhere else except on our platform. And it's one click away. I showed you exactly how to apply it. It's so easy and it's automatically generated. Well, here's the beauty of this. We're going to throw in the PTS Primo charts if you decide to become a student, and we're only going to charge you $17.64 for a full year, okay, on top of the course. Well, actually, you know what? We're not going to charge you anything at all. We're going to throw in a full year free. So this comes with your course membership. If you sign up for the course now, you'll get a full year of the PTS Primo charts. And remember, that just doesn't come with the PTS Dynamic Stop. It also comes with so many other features. This is just a partial list of all the things that are included on it. 44 years of techniques and methods and tools I've accumulated you won't find anywhere else except on the PTS Primo Charting Platform. Like our enhanced buy-sell line, which tells you the overall trend. A strength of trend tool, which will give you a really good warning or a red flag if a trend is about to run out of steam or if it still has momentum left. You'll get one-click entries and exits. This is another great feature where you can pinpoint where to enter and exit using different techniques. Auto-generated exit levels and a signal scanner. You can scan for these things as well, okay? This all comes with personalized tech support. So if ever there's an issue about loading a chart or anything concerned with the platform, our tech support is great. They'll probably be there in a matter of minutes to answer any question you have and resolve your issues. Okay, so once again, this is a Dynamic Stop two-part course. This is the last presentation you'll see me give on this because we're starting the course this weekend. Actually, we have it scheduled for 8 a.m. Pacific time this Saturday. Remember, it's a full-day live course. It starts roughly at 8 a.m. The first hour or so will cover how the basic overview and application of the Dynamic Stop. The second part of the course will cover these different ways in which to trade with it. One of the ways, the features that I just shared with you today. Remember, all these things, all these features are auto-generated on the platform. This includes 1 year of the PTS Primo charts available. Now, the one thing I have to mention, because of the advanced usage of this, especially in the trading, the PET D is required, okay? So you have to have the PET D in order to be able to use these trading techniques, because the PET D is really going to help you take that to the next level. Contact Pro Trader Strategies if you want to be a part of this course or if you already are a PET D course member. And here's how to take advantage of this. Our pre-launch pricing was set to roughly about $4,000. What we've done is discounted it down 25%, down to $29.95. You're going to save $1,000. And remember, this is PET D required. The good news is that even if you can't come up with $29.95, we have payment plans available. So for a relatively small deposit, you can still be up and running any class this Saturday. Okay, once you become a student of mine, you're a student of mine for life. So this is a great way to become a part of our family and to really learn and become a member of this new feature that we have, okay? It's a great inaugural course. No one has ever used this before. You're going to be the first, and you're going to be the first to learn it live in this online course. Remember, this is a special one-day live event. Class size is limited, so reserve your spot now. Here's how to become a student of mine. Contact Pro Trader Strategies, all right? I would highly suggest calling them right now. They have trading consultants on the phone. If you wanted to establish a payment plan, they would be more than happy to give you an estimate or to take your order over the phone. Remember, this class starts Saturday. You can be up and running by giving them a call as early as today, and then you can have all the information ready for the course, and you can be there with me on Saturday. Now, the link you see at the very bottom is the link that will take you to the sign-up page as well as the info page. It's not a live link, but they have just posted a live link on the chat box on the GoToWebinar column. So if you have the column opened up, you can see underneath the chat box that you can just simply click that on and we'll take you to the sign-up page. Now, I promised I would be answering your questions at the end of today's presentation. So if you have them, please go to your question portion of the GoToWebinar column. Just type them in and they will appear and I will answer them as soon as possible. Okay, here's a question. In the background, does the bracket still use the buy-sell line or the proprietary PET D fundamentals? Well, that's a good question, but that will be answered in the course. First of all, I would say yes, you can use anything you'd like, but I will show you the highest probability way for using that. Okay, I just don't want to give away everything because that's what we're going to be teaching in the course. So if you wanted to, yes, you could use either one of those or both, but I will tell you what I believe is the best way to use it. Okay, so this is what we're going to be going into detail in the course. Someone says, when you say you are a student of mine for life, what does that mean? Well, basically that means is that you have access to me for whatever you'd like. All right. Now, when I discussed this with Pro Trader Strategies, they said, well, Steve, are you sure you want to say that? Because, what if you stop trading? Well, trust me, I've been trading for over 4 decades. I don't see any point right now where I'm going to stop trading. So as long as I'm still here, alive and kicking and trading, you'll have my personal email address. You can always contact me with any questions. I'm sure you're going to have questions, and I want you to have questions. This is how I see your progress and see if you're learning. So the only people that get my personal email address are my course members, and you can email me whenever you like. And that's what I mean by being a student of mine for life. So this is what you'll get. You'll get that as well. Now, someone's asking about the payment plans. How do I get a payment plan? Well, remember, as I stated, call Pro Trader Strategies, 310-598-6677. They will take your order over the phone if you'd like, or they will give you some type of an estimate or an idea of what a payment plan would be for you. And remember, they're very flexible. If you already have the PTD, or if you already have the platform, they're very flexible. They'd be willing to work with you. And we're here to teach you. We're not some vendor that says, okay, well, now that we've got your money, we'll see you later and good luck with the course. No, we really want to show you how much and how sincere we are in trying to train you to become a consistent trader. So this is really a great price because you're going to get this before anyone does. If, depending on how many people sign up, we may have to even increase this price later on down the road because this is, I've just seen for myself from trading this, it really, really has some high expectations. So I really think it can help you. And this is just one of the techniques I've shared with you. There are 2 other techniques that you're going to see that will really knock your socks off, that are really simple and easy to apply. The best thing about them is because it's based off this dynamic stop, is that you already know your risk. You have defined your risk prior to the trade. So that's one of the beauties of this. So then you can decide for yourself if you want to take the trade or not. So because it's based off of, stop placement, that's one of the best things about trading with it. So you know what your risk is, you know where to get out, you know where to get in, and it really has some high probability. And once you combine this with our other tools, such as the buy-sell line or the PTD, you'll really take your trading to the next level. Remember, class starts this week. We've got another question. Someone's asking, how long are the classes? Well, since this is going to be a 2-part class, it's basically going to be a minimum of a couple of hours. Okay, it may go longer than that, maybe even closer to 4, depending on how many students we have. Right now we have a good group and we want to keep it small, but if we have to have another course, we will set it up probably for the next weekend if we have an overflow of people signing up. But for right now, it's just the initial class was set for this Saturday. Coming Saturday will be at 8 o'clock Pacific time. We'll have a brief break in between the 2 different sections, and then we'll start off with the next one. Okay. Someone's asking, what are the sections again? The first section is just the overview and the application of the stop. Okay, just a very brief kind of a background of stop placement. The second portion is the more advanced, and that's where we'll be using the PTD and different features, teaching you these different techniques for trading. That's where it'll be a little bit more advanced, but you'll really be excited seeing some of the results here, okay? And many of them will be very recent results because of the nice movement we had in the markets, okay? Good questions. Okay, remember, if you are serious about taking your trading to the next level and you want to be a part of this brand new feature, don't wait. Call up Pro Trader Strategies. There's no obligation. Just because you call doesn't mean you have to put your money down. You can get a good idea, but remember, you have to make a decision in the next couple of days because the class is going to be this weekend, okay? Now, as we close, I just want to say thanks so much for attending. I hope you learned something. I hope you really saw how important this new feature is. But as we take one last look, I just want to say thank you so much, but I look forward to all of you being in the class. I really want to teach you this feature, and I really think it'll help your trading, okay? Thanks so much for attending today, and I look forward to seeing you this Saturday in our new course class. See you then. Bye-bye.